Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, August 12th, 2013. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. Previous day's trading we saw another spinning top type candle, and that followed a previous spinning top type candle, and today another very small body candle with a relatively larger shadow on the bottom, highlighting the upside price rejection from below the 1687 level. Now, for the fourth consecutive trading day, we've seen the market either test to or just beyond the 1687 level, and it has held as very, very solid support for this market. Previous resistance, then support, and acting as support once again. So this is a crucial area if the trend is going to continue down. If we do see solid bearish activity down below this level early, we could see the market testing down to the top of this highlighted yellow zone, and we saw in the recent past that that area acted as an area of support, and that's around the 1675 level. So very solid support where the market's trading below the solid 1687 area. For today's candle, we've seen the market close up towards the high and certainly well above the midpoint level, suggesting that the buyers have taken control at the close of trading, and this does suggest a possibility of a change of trend to the upside. We've also seen the colour of the body change from black to white, and that suggests that momentum in net terms may have swung to the buyers, and there is a possibility of a change of trend. Now, if the trend does change, obviously very solid resistance around the 1700 level and around the Tenkan Sen, which is trading at 1696. So very solid resistance, very close above where the market's trading, but also very close below where the market's trading. So certainly not a good market that we want to trade in any strong terms. We should wait for resolution of the market above or below the support or resistance. In terms of the Fibonacci extension, and here we've seen the market test down through the 50% level, through the 61.8% level, and be rejected from there on a candle where the short-term dynamics are favouring the buyers, not strongly so, but certainly not favouring the sellers, and swinging more of the balance towards the buyers being the stronger party for today's candle, and therefore suggesting that there is a possibility of a change of trend. So we should be looking for a possible higher high and higher low. In terms of the Fibonacci retracement, we've seen the market test through the 78.6% level and just through the 100% level, being strongly rejected from there on this candle where the buyers are in the ascendancy, and suggesting as well a possibility of a change of trend. In terms of patterns in this market, and this certainly does look quite an important pattern may have developed. It's a complex head and shoulders pattern, and with all patterns we require the prior trend leading into the pattern, and that's very important, and a lot of people make that mistake. They go and see something that looks like a pattern, they draw the boundaries, but there's no trend leading into it. A pattern must have something to reverse, and a trend to reverse is what we're talking about, and here we have a solid trend leading into this pattern. Here we have a complex left shoulder with two peaks to the left shoulder, a very distinctive head, and then a very minor right shoulder. The market has traded through the neckline, and we draw the neckline between the two shoulders, but failed to close down below, and confirmation of the pattern is a close down below that neckline. So there is a good possibility that we could see a close down below that neckline tomorrow, confirming the head and shoulders pattern. If we do see that, the target would be the distance from the head to the neckline projected down from the breakout, and that would give us a possible target down around the 1660 level. But let's not preempt this market. As you recall, with the Fibonacci techniques and the short-term dynamics, they aren't favouring the sellers, so it's more likely that we could have a change of trend, but we do have to be on the lookout for a possible close down below this barrier, and that is a real possibility, and we do have that target there. In terms of Ichimoku, we have a market that's trading well up above the clouds, so a market that maintains a very strong bullish bias in the long-term time frame, trading above the Kijun Sen and that gives us a bullish market in the medium term time frame, and that Kijun-sen is moving higher, reflecting some solid upside momentum around this level here. Certainly not reflecting this pullback that was seen in the last couple of days, but giving us a bullish market in the medium term time frame. But trading down below the Tenkan-sen, the green line here, and giving us a bearish market in that short term time frame. So we're getting some mixed signals. If we look across here at the Chikou span, that's above the corresponding price action, so it's telling us that the market has some solid bullish momentum in that longer term time frame, and suggesting that the trends in the long term and the medium term time frame are fairly robust, and that what we're seeing here in the short term time frame may just be a minor pullback. As I've already mentioned, solid support down around this 1687 level. The Tenkan-sen has the opportunity to hold as resistance for this market, and we saw for today's trading, the previous day's trading, as the market attempted to trade up above the Tenkan-sen, it traded to the 1700 level and was strongly rejected from there. So there is a possibility that if that trend does change to the upside, that we should see some strong resistance starting to come in around that 1696 level, where the Tenkan-sen is trading, extending up to around the 1700 level. But by the same token, strong support down below. So a market that's really not a good trading market. We need to wait for resolution. If we do see a solid bearish close down below that neckline, there is a possibility of the market trading lower, but we do need to bear in mind the top of this highlighted zone, which has recently held as strong support, and anywhere through that zone has a possibility to hold as very strong support for this market. So not a good trading market to the downside. To the upside, we'd definitely be looking for a strong bullish breakout up above 1700 to be confident of the market trading higher, and that may set the market up for a test to the 1709 level, and watch the market if it does trade up around there. But we can't preempt the market. The short-term dynamics are now favouring a change of trend, but let's look for confirmation of that, or for a possible close down below that neckline.